Good afternoon, everybody. Welcome to this last session. It looks like you're all more or less awake and attentive still. So thank you in advance and look forward to the session. I think what we'll do is we'll start with a brief round of introductions before we move into the session. So maybe a repeat of a name, the company you're for, and a brief description of what you do. Grant.
Thank you, Richard. Good afternoon, everyone. Grant Berndsen, I'm the CEO of Terra Firma. We're a CNI-focused renewables player, Southern Africa-focused IPP, EPC contractor, and owner of assets. So we've been around for about 13 years now, predominantly focused in the South African market, but we've done extensive work in Zimbabwe and other jurisdictions, Namibia, Ghana, Malawi, to name a few. To date, we've installed capacity in the order of 350 megawatts across around 550 separate individual projects, and under ownership in the order of about 100 megawatts that we own on our asset base and supply power to our customers. So yeah, very, very keen and focused on the market, both here in South Africa and on the continent, and believe we have a large role to play.
Thank you. Rivoningo.
Good afternoon, everyone. I'm tempted to follow suit and just give a detailed brief of what ESKOM does and what we supply. But I think I'll leave that for later. I'll focus on the ESKOM Green. So, Rivoningo Mnisi, Group Executive for ESKOM Green. I think you might have been aware that ESKOM has been quite bold of late in terms of communicating our strategy. We focused on resolving issues around load shedding, but most importantly, we're looking forward into 2040. We've managed to secure 102 years of operation, so our strategy is really geared looking to the next 100 years, and we see renewables playing a critical role. Our ambition is around 32 gig by 2040, but we do acknowledge that with the repurposing of our power stations, there's certainly a bigger role of an energy mix. We see gas playing a major role, and hence we've got plans to put about 3 gigs before 2030, and then scaling it up to about 6 gig in 2035. And then secondly, we also see a major role from nuclear as well, scaling it up to about 10 gig, just to make sure that as we decommission the role of coal and we clean up our energy mix, we also maintain that stable base load to support our integration of renewables. Thank you.
Thank you very much. Ademola.
Thank you. Thank you, everyone. My name is Ademola Ogunbanjo. I'm President and CEO of Oando Clean Energy, which is a part of the Oando Group, an oil and gas company. Our mandate is to design and develop climate-friendly and bankable projects. And we have designed the organization along multiple renewable energy verticals, geothermal energy, wind energy, solar, PET bottle recycling, carbon trading, methane abatement, and all of that, as well as sustainable transportation. So we have projects across about 6 to 7 verticals, starting from Nigeria, and then we're looking to grow across the continent.
Thank you. Lindiwe.
Good afternoon, everyone. My name is Lindiwe Zwane, and I'm from the Development Bank of Southern Africa. We are a development finance institution that is 100% owned by the South African government, and we were essentially created with a mandate to maximize development impact by investing in infrastructure projects across sub-Saharan Africa. So not just in South Africa, but across sub-Saharan Africa. We currently have a balance sheet of about $6.5 billion US. Given our shareholding, most of that we do in South Africa, and about 30% of our asset book sits outside of South Africa. We invest across all infrastructure sectors, and energy is one of the big contributors to our book. Thank you.
Thank you very much. So coming back to myself, I manage Juwi. We're a project development, EPC and O&M business based in South Africa, but working across the continent. We've built some 400 megawatts of projects and currently have about the same capacity in construction. And what that means, really delighted that this esteemed panel has representatives from the funding side, from the IPP, the asset ownership side, from South Africa and elsewhere on the continent, and from a utility. And so I think is very well positioned to comment on what's really quite a broad topic, of course, because renewable energy is remarkable insofar as it's relatively new, at least from a market penetration point of view. The technology's been around for maybe 100 years, but it's only really started to scale in South Africa and Africa in the last decade, but manifests variously in distributed generation, and as we saw in the last session, now with a lot of focus on the power pools, which have got the ability for much wider inter-country and eventually perhaps continental balancing. So it's quite difficult, but we'll try through the session to find some threads that draw together common themes, but also perhaps go a little bit deeper into some of the particular topics that are facing these different representatives here. And so maybe I'm going to start, and going backwards, Lindiwe, to start with you. If you can comment on a couple of things against the background of a recent report, I think 2-3 months ago, from the International Renewable Energy Agency, reflecting that while renewables are moving in Africa, that in fact the year-on-year growth is only something like 7%. And that number is not really large enough. We know about energy poverty on the continent, and we have to go much faster, notwithstanding the global imperative against climate change, not maybe helped by some of the current geopolitical developments, but we need to go faster for the continent. And with that as a background, maybe ask 3 questions of each of you. Lindiwe, for you, as a DFI, as a development bank, are things moving fast enough? What needs to change to go faster for you? And then perhaps comment on what you think for the continent would be advantageous moving forward. What do we need to do as a continent?
All right, thank you for that question, Richard. Are things moving fast enough? They are moving. They could be moving much faster. I think in the last decade, we definitely have seen an acceleration in terms of renewable energy project implementation. Some of the challenges that we're seeing, as TBSA, we have a geographic footprint including West, East, and Central Africa. In some of the countries, you can't start talking renewable energy without talking baseload energy. So, as an example, accelerating funding projects for gas to power in certain regions is quite important to unlock renewable energy investments. And that addresses some of the challenges with grid intermittency. But also what we're seeing is that in South Africa, I think there are a few countries in the continent that have done quite well, even though they can do much better. South Africa, Egypt, Morocco, and Kenya. So if you look at some of the things they've done well to get them to this position is, one, having transparent procurement processes, but also those countries are among the top countries in Africa with more grid capacity, as an example. Also, I think, maybe let me stop there for now. There's a lot to say on this topic.
Good, thanks. Ademola, you have I guess, a slightly different perspective, and having many verticals also gives you a bit of a helicopter view of renewables against the context of other technologies and other energy sources. Can you comment?
Yeah, absolutely. Thanks. We've heard in recent time that Africa saw, I think, $40 billion. And what we hear following that is the fact that that's doubled investment over the last 2 years when we're comparing numbers. What we don't hear following that is that that's roughly about 2% of what was invested in 2024 globally. So no, we're not moving fast enough. And we're not moving fast enough because we're not seeing investment enough. We're not seeing investment enough because we're not seeing enough cohesive political framework or policy framework from the political environment to guide investment in renewable energy infrastructure. Different countries have their policies and their targets, and that has to be respected. Africa is a continent, it's not a country. So there are diverse strategies around the deployment of energy infrastructure. But if we're going to see increased investment, we need to get the AU to do what the EU is doing. We have to come up with an African agenda for how we want to grow investments in the renewable energy space. And that agenda must, of course, run in parallel with how we're going to invest in the deployment of infrastructure for gas, for the base load that we're talking about. That said, we must also stop waiting for foreign direct investment for us to grow sustainable energy infrastructure on the continent. Africa must invest in renewable energy infrastructure on the African continent. I was having a conversation in Berlin last week with a gentleman from Namibia, and he was very quick to tout the hydrogen production project that's going on in Namibia today. And he said, the German government is funding. I asked him why, and he said, because we can't afford it. Africa needs to be disabused of the thought that we cannot afford $1 billion for a hydrogen production system. We can. We only need to reset our priorities. Africa needs to decide what role we want to play in this new energy drive. Do we want to continue exporting raw materials as we have done crude and gas for how many decades now? Do we want to do that with lithium and cobalt and copper and tin? Or do we want to turn Africa into a battery manufacturing powerhouse? Because we need it. Because when you speak about the intermittency of wind and solar and the danger that poses to the integrity of our grids, what sits between that, which soothes it and provides a stability that's required, is storage. That storage is largely batteries. But what we're doing today is we're exporting the raw materials and screaming that the battery is too expensive. Therefore, the infrastructure that is required to boost energy distribution on the continent, a continent that's lacking in energy. We're now saying it's too expensive, therefore renewable energy is not affordable. It cannot be tariffed on a cost-reflective basis. Therefore, it means that government must subsidize it, and government does not have the money to subsidize it. Therefore, government is waiting for foreign investment. All of these things need to be cleaned out. We need to have a common front, a unified approach to how we want to invest, and we have to lead that investment as a continent before others can join us.
Yeah. Thank you. Rivoningo, that's a beautiful platform for you as the group exec of ESKOM Green, and you maybe have more or a bigger lever than anybody else to step into those challenges.
I think my fellow panelists did the core issues very well. But in support and also bringing in solutions to these challenges, because I often saw that as Africans we understand our challenges, but often we do not spend time on the solutions to these challenges. So, my view is that the solutions that we need to put in place is continental policies that govern around our continent. When we say this is the roadmap for the implementation of this renewable energy, Africa on its own has got a lot of renewable energy. In fact, if you start digging into the pockets of the different countries, you realize that a lot of them are actually, using renewable energy. The issue is how we scale up the adoption of that renewable energy. So we've got the resource in terms of the rivers, the mountains for pump storage. We also have the resource in terms of the sun and the wind. We also have the resource when it comes to the minerals itself, including for green hydrogen with the platinum, which is quite critical. But also, as my fellow panelists said, the critical minerals for the battery storage. So we have that, but I think the issue is really the execution plan that we lack. But to bring it home, I think how then do we, practicalize this is we need to learn from other countries, and what other countries have done, like China, Europe, Americans, is they tend to have a champion. So in Africa, maybe because I'm coming from ESKOM, and as a group renewables energy, is that we've got a lot of small companies, but what we also need is an African champion that we can rally with, that then we come together around. If you look at the scale of ESKOM as it is, we're probably the biggest utility in Africa, by far. What has been our role in terms of the renewable energy space? Quite limited. But whenever we engage with the outside players and the world, what they're looking for is to say, we're willing to partner to penetrate Africa and support industrialization, factories and whatever that you call skills development. But we need a partner that is of equal to be able to trust and back to develop factories and all of those things. And I think, ESKOM is well positioned for us to do that. The other issue that I want to also bring through is that once you have a champion like that, it's also very good to build the confidence. Often you hear a lot that we speak about finance and investment and so forth. But what the world is looking for is confidence in South Africa. And I think South Africa has got really built that momentum with the REIPPPP program and everything else that we've done. Ours is to look at having a champion that then allows us to grow to the rest of Africa.
Thanks very much. Grant, you work in, you're building large projects, megawatt scale projects, but it is my understanding is that you work in somewhere in between very large utility scale projects and small commercial and industrial projects, in the sort of 10, 20 megawatt scale projects that I suspect, and you could perhaps comment, are in South Africa at least, but probably in many other African countries are also critical, where the scale of the projects, they're less influenced by political factors, sometimes self-funded or with some corporate finance, and the rate of penetration is determined by other factors. Can you maybe comment a bit?
Certainly. I think, we witnessed a great trajectory over recent years in this space, and being very close and customer-centric, a customer-centric business is understanding that customer behavior and what drives that. And there was true testament when we had load shedding a couple of years ago, and that really drove the customer behavior significantly. And since then, we've obviously seen a dip, even though the business case for renewables is largely better than what it was at the time. We've seen similar behavior occurring in the likes of Zambia, who also went through a lot of drought and had load shedding towards the end of last year, potentially heading in the same direction this year. And all of a sudden, there's an uptick in interest from prospective customers. So that's been a key factor from our perspective in terms of what's driving the deployment of our projects, and for customers that are sitting on the opportunity to make a decision as to whether they go forward or not. What we typically don't see finance as a major inhibitor to moving forward with a project. I think we've seen a lot of advanced and creative work from funders in the space who are able to provide funding in a way more efficient manner than has been in the past. That's through experience and relationships and understanding of players like ourselves that they know and trust that can do a quality job, and therefore the funding comes with a lot less hurdles to jump through. So, but it still is a very noisy space, and I think that trips us all up, and it trips the customers up. So without the major catalyst like a load shedding, the project or the opportunity then drops down the priority list. Coupled with that, you then have a very competitive space with lots of different opportunities and options on the table, and a customer then stalls and hums and haws around which option is the right way to go. Should they wait for wheeled supply to come on board? Should they wait for batteries? And ultimately, that slows down the process. And then, of course, dare I say it, if all the stars align and you have a willing customer and a willing project that's going ahead, then you're now faced with grid access challenges, which could further slow down the project and stop the project in its entirety as well. So we're seeing that increasingly now, not only on ESKOM connected projects, but also on the municipal connected projects, where there are new and additional hoops to jump through in terms of getting projects connected. And it's frustrating not only for us and our shareholders, but also for the customers who have an expectation that the projects are going to be rolled out within a certain space of time and at a certain cost. But it is a known fact that we do need to cater for accessing the grid and upgrading the grid to be able to handle this intermittent supply that's coming onto the grid. So we need to come up with solutions, and we need to work with the various stakeholders to come up with these solutions. Otherwise, we're all going to get frustrated, and the market isn't going to move forward in the manner that we all hope it will. But I'm confident and bullish that we will, as an industry, come up with those solutions. And I think the rate of deployment will continue to accelerate going forward, particularly now with where we sit on high grid tariffs, market reform and liberalization, as well as lower equipment costs, particularly on the battery energy storage side.
Yeah. Thanks. Yeah, you would think it's a slam dunk. I can also confirm from where we are, we're building projects now, but the projects that we're building, project in Senegal took more than 5 years from inception to close. The data center project we're building was 4 years almost to the day to get to close from when we started engaging the data center. And I mean, Ademola, maybe you can comment, because I think we all agree that we want to invest in our own project. But for any investor, whether they're African or international, complexity turns off deals, slow processes, permits, they're complications, right? Are you seeing the same? And do you think that as we start to deliver projects more quickly, that will let's say, crowd in investment faster? Or do you really think that this continental policy cohesion is the strongest driver for any investment, not just FDI?
No, so that plays a role when we're looking at a continent-wide, perspective. But when we speak to specific projects, you find that, I mean, no offense, Lindiwe, most of your colleagues actually don't understand the renewable energy space enough to risk it appropriately, therefore price it appropriately. So what you find is it takes forever to close a financing deal. And when I say forever, I mean somewhere between 9 months to about 3 years.
Yeah.
And I say that based on experience, right? There are DFIs that we've been speaking to about the scaling up of the rollout of electric mass transit buses in Lagos. I mean, Lagos has 24 million people. 70% of those people use public transport every day. Lagos needs about 24,000 12-meter high-capacity buses. They have less than 1,000 working, and we're trying to fund 500 electric buses. You would think that's a no-brainer, right? Well, we've been talking to them for 3 years. But you can't blame them. It's just, it's an understanding issue, right? And therefore, when you don't understand it adequately, you need more data. Gathering data takes time. There aren't many funds out there ready to fund proof of concepts or pilots for you to gather the kind of data you require. So equity has to do the work, which was what we had to do. However, as time goes on, and to your point, as we deliver more projects and they show up to be viable, you will see more and more financing organizations respond quicker. Now, the commercial banks are more nimble, but they're less patient and more expensive. And to fund most of these projects that we see within the clean energy space, you need patient capital that's often priced at single-digit interest rates. And you won't find that, with the commercial banks. So it's catch-22, right? Do you want speed to capital, or do you want the right type of capital? Patient and not expensive. Equity will play a major role. Equity will need to start. Scale will be based on external funding. But when we start with equity, we need to prove that it works. Not only the technology or operations resilience, it has to speak to commercial viability as well, right? And that's what will, attract the kind of funding we're looking for.
So one of the things that's related to that is transactional complexity, right? I mean, I recently signed a supply agreement for an EPC contract. It was 1,600 pages with the annexes. And that's quite usual for us. And it means that a decade and a half into at least the South African journey, we haven't managed to take a lot of that complexity out, not to speak of the legal fees that come together with that complexity. Maybe Rivoningo, to you now, as you step into ESKOM's, or not step into, but accelerate ESKOM's renewable energy program, do you have some thoughts around managing to go fast and managing to simplify the transactional component of procurement and construction and closing?
I think the moment you hear ESKOM, I think one word screams loud is procurement processes, bureaucracy, speed of execution, and these are real challenges. The last one is also the PFMA, Public Fund Management Act, that also, it's not really a deal-making kind of environment. And if you look at the renewables and the nature in which business gets done in that space, it's completely different to the traditional business that we find ourselves in. For us, what has been quite helpful in terms of setting up ESKOM Green is we've got multinational, banks and the likes of the World Bank, CFund, AFD, that are quite helpful, because I think they tend to deal with global funding. They understand the political space, the social environment issues. They've dealt with government kind of funding. So we're finding a lot of traction in that space. Secondly, it's also what is growing a need as well is the fact that ESKOM Green will not be successful without partnership with the IPPs. So it's therefore pushing us to look at a public-private sector partnership model, which we spend a lot of time consulting on. So we've consulted a lot of IPPs to see what works, and then also a lot of the DBSA, IDC, our local banks. And one thing that is becoming much more important, it's really the fact that that will be the solution in terms of attracting funding. The international funders are also willing to come in as debt or also contribute towards equity kind of funding, as long as there's participation of the private sector. So where the funding challenge is moving us into is a space where we need to collaborate, not just as ESKOM collaborating with our counterparts in terms of government, but collaborate with multinationals and also the IPP. And what is also helping, and what is really the challenge, is banks want to reduce risks in terms of their funding model. And what is becoming much more important is that the moment you have that kind of a combination, it also works well in terms of your interest and lending rates into those vehicles as well.
Thank you. So on the subject of rates and returns, and I'm led to believe we're not an investor, so I don't know firsthand, but the equity returns on renewable energy projects, at least in South Africa, are sitting at, I don't know, maybe 12 or 13%. We could debate that. But that's maybe 5 or 6 points below returns for a fossil fuel investment, for an oil and gas opportunity. Lindiwe, and then maybe Ademola, can you comment on that? So on the one side, you've got this very strong environmental pressure, and you've got this idea that the LCOE of solar is much lower than anything else, and even with batteries is competitive. But somehow it's really difficult to make money in the space, right? Why is that?
You see, we've been drilling for oil for like 60 years or more on the continent. We've mastered that space. There's a lot of efficiency in the production process. Technology has improved significantly even for the exploration process. So yes, it's a much more mature market. Once upon a time, people would drill for oil with about $150 to $250 million deep offshore, and they won't see oil in there. We're seeing less and less of that now because technology has improved significantly on the seismic front. And we need to give the renewable energy space time to mature and grow. The bottom line is, for Africa, we can't pick and choose. We're energy deficient, right? So at this point, we continue to invest in gas. We also must invest in, and perhaps maybe what an ESKOM or an Oando must do at some point is to create an average hurdle rate, right? So we invest in oil, and that will give us maybe 26%. And then we invest in solar, for example, and that will give us maybe 13. And then you add that, it's 39, and then you divide by 2, and you have, an average hurdle rate that makes sense to, the shareholders. The bottom line is, we cannot compare before we invest. We must commit. We commit to the fact that we recognize that the impact of climate change on not the environment, on us, is a reality. And to protect us and those that will come after us, we must commit a certain amount, whether it's 10%, 20%, whatever it is, of whatever we make from the oil side to driving investment on the renewable energy side. We cannot pretend that it's not coming. Clean energy is coming. Africa cannot change that. So let's stop kicking and screaming. Let's face it, boldly and decisively, have a cohesive front to how government is going to engage it on the regulatory and policy side, how government is going to invest in it, how government is going to partner and encourage the private sector to invest in it and drive the investments and sustain it. Those are the conversations we should be having, because it's going to happen. That's what I see us needing to do. And that speaks to the banks as well, right? More and more investments must come from the DFIs. A number of times you find that they're only more comfortable investing if there's some kind of guarantee from the government. And the governments are now, often shy to provide sovereign guarantees and, things like that. We have to look at these projects on their credit. They are viable. Yes, not as viable as oil and gas, but they remain viable still, and they get better. In 2022, when we bought our first set of buses, each bus, 12-meter buses, all electric, cost $406,000 to land in Lagos. Today, it is $287,000. At that time, warranty on the battery was 7 years. Today, warranty on the battery is 10 to 15 years. Technology is making it cheaper, and by becoming cheaper, it means that it's becoming more profitable. Let's give it time to mature. We're in incubation phase. It may end up being more profitable than fossil.
I hope so. Lindiwe, do you want to add to that?
Yes, definitely. As the DBSA, we are sector agnostic. I think the need for energy on the continent is definitely well understood. And we need to keep in mind that there are several things we need to balance. And I think as a DFI, the two top twin pillars we need to balance. One, we have to maximize development impact, but we also have to do that while still remaining sustainable and viable as a financial institution. So yes, I agree. We can't afford to pick and choose. And in certain projects or areas, that's why the need for blended finance and grant funding becomes very important. I just want to go back to a point that was raised earlier around the time it takes for projects to close, and perhaps just touch a little bit on the role that financial institutions play in that. One, I agree, awareness is very important. Sometimes the perceived risk in Africa is quite high. So collaboration, talking to our partners to understand the country context and the risk becomes important. But also, what we find is the reason why some of these projects take so long. They always say it's always about the jockey, that's running the ship, and collaboration. And you find that sometimes people hold on to projects. They don't necessarily have the requisite skills. They do not want to partner with more established project developers, for example. And they always say 20% of something is better than 100% of nothing. So I find that's one of the reasons why sometimes this project development cycle takes so long. On the matter of capital availability, having patient capital, having the right capital, I also find that, so as the DBSA, one of the products we do have is project preparation funding that helps projects basically from pre-fees to get to bankable feasibility. What we find is that once you have the right jockey, once you have these transparent procurement processes, once you invite private sector, naturally, investors are attracted to those projects, investors outside of DFIs and commercial banks. So if we solve some of those things, that will unlock some of the capital. And lastly, on the matter of guarantees, I know we get quite a lot of this as a DFI. Why do we want guarantees? Why? It's all about risk allocation, and risk mitigation. And I think some of the challenges we see on the continent is the financial position of our state utilities. Yes, there are ways of getting around that without guarantees. You could ring fence cash flows, from industrial users, from mines and so forth. But maybe just to make a point, there's always a reason why funders require certain things. And if we collaborate and we communicate, we can perhaps make each other understand why and perhaps provide solutions that we've never thought of before. Thanks.
Thank you.
Nice to meet you, Lindiwe.
Nice to meet you too.
I'll be coming for that money.
I'm going to try and rebalance a little bit and go back to Grant, because Grant, you guys are investing equity in projects. How are you raising equity against all of this background?
I was going to make the comment now on the low return base that we have, and I think the key is, from our perspective, focusing on the C&I basis, but I think it is applicable to utility scale as well, is moving slightly away from a commoditized offering into the market, because I think the industry is its own worst enemy, and we all drive prices down, and at the end of the day, the customer is the only party that wins out of it. But I think the way from a pure investor perspective, is to be able to offer more value, additional services where you can accrue higher returns throughout the value chain, not just install ownership, but as the market moves forward, offering additional services back into the grid to traders and the like. I think that's certainly an avenue that we see in the medium term for trying to boost up the returns on investments and projects.
But for clarity, you're working off a straight commercial basis. There's no DFI funding. You've got commercial debt.
Correct.
You've got sponsors who want to make real returns on their money.
Yep.
And you're running that business like that.
Correct. And I think speed is key for us. Sure, it would be nice to have cheaper capital. But if that comes at a time cost, and it's going to cost a whole lot of due diligence fees to do that, then we'd prefer not to. I mean, we're in the process of building a 28 megawatt behind the meter plant right now. The first 10 we've essentially built off our own balance sheet, and we're in the process of raising project finance on it now. And it's amazing to see where the industry's moved in terms of the speed of us being able to secure that, the due diligence process and the costs that are accompanying this particular opportunity. It's really pleasing to see how far the market has moved on. And I think that's, for us, a super key aspect to be able to do things quickly, cheaply, and boost the returns on projects.
Okay, thank you. I see we've only got a couple of minutes left, trying to maybe summarize a couple of the threads through this, and then I'll ask each of the panel to offer a wrapping up statement. I mean, as I think we'd expected and opened this discussion, we're comparing not just maybe apples and pears here, but watermelons and lychees. We've got a continental imperative that we need to think about, and that's not always exactly the same as you might find in, let's say, a C&I environment in South Africa, or perhaps in some of the other leading countries. It's fantastic that we have all of these different good problems to have. I remember 10, 12 years ago when the sector was just scaling, there were very different challenges, and we've come a long way. We have many challenges to face, and as always, strong partnerships, inter-country partnerships, the power pools, and relationships and strong partnerships between industry and government, managing to balance, Ademola, as you quite correctly say, sovereign initiatives against continental initiatives and smaller scale projects driven by pure commercial needs with larger projects that need assistance getting over the line, all needs attention, but that's what keeps us all busy and pays our salaries, right? So that's all good. Perhaps then we're right at the end, a very quick statement from each of you. If you could wave a magic wand, what would you do to make us go faster from where you're sitting? Lindiwe.
Okay, what would make us go faster? Firstly, to say capital is available for renewable energy deployment. Yes, it depends on what type of capital is required, but it is there. There are enablers to unlocking that capital, such as having the right project sponsors and all of that. But one thing it's more of a plea, and I think it's been made quite clear on this panel that to unlock more renewable energy projects, you also need base load. I think we've seen a lot of funders pulling out of funding gas to power projects. So my plea, would be for the financing community to continue to support gas to power projects. Ultimately, it supports putting more renewable energy projects in the grid. Thanks.
Thank you. Ademola.
There's an African proverb that has become an Oando teamwork mantra. It says if you want to go faster, you can go alone. If you want to go further, you go together. Yeah. In the energy markets today, we're not in the age of competition, we're in the age of collaboration. To go faster and further, we must collaborate more at the organizational levels, across borders. Countries must collaborate. Africa must develop a common front on how we want to tackle energy. We must trade amongst ourselves as a continent more and more. We're seeing that growing now. ESKOM has to do business with Oando, whether in Nigeria or in South Africa or both, or even somewhere else. The bottom line is we must pool together our resources, expertise, intellect, and just push Africa forward.
Thank you. Rivoningo.
I think for me, it's really innovation, and what would drive innovation for the African continent. Number one is interconnectedness. We've got a really good opportunity, starting with the SADC, to really connect it and leverage the neighboring countries. They've got a lot of resources. So the infrastructure network, let's not stop thinking about it in terms of our own constraints in South Africa, but think of a intercontinental kind of connectedness. I think that would unlock really, and also create a lot of innovation across different countries to come together.
Thank you. Grant.
So my one, it would probably be a Swiss Army knife in terms of what I'd want it to do. But if I had to boil it down, two things. I think simplicity and standardization is key. I think to your point around the lengthy EPC contract, we need to get the market to that place where we can standardize and for both role players, suppliers in the market, and customers, funders alike, so that we don't have to reinvent the wheel every single time. And that's across the board, not just contracting, but many aspects of our industry. And then the second part of that would be our beloved grid. I think if we can wave a wand and wonderfully upgrade, as well as standardize and simplify access to the grid, that would solve a lot of problems and accelerate the process. And I think that also applies to continental growth as well, because I think that problem is going to manifest itself there as well.
Exactly. Very good. We're a minute or two after the end. Thank you very much to the audience for your attention, and to my esteemed panel members for their contributions. So that's the end for the afternoon, and thank you to the conference organizers. Good luck and go well. Thank you.
Thank you.
Okay.